Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jairam Krishnamurthy, your morning brew of global financial updates. Folks, even though there's been positive set of updates on the trade front, we see China issuing a statement demanding the US to correct the wrongdoings just days after their consensus suggesting talks. On the other hand, yields whipsawed yesterday, suggesting market participants moved while concerns with such a rise in yields continue to exist. JK, there's been a lot of activities around the global financial markets. We've also seen China, working around lowering their lending rate. So, what sort of updates should we expect, or what sort of activity should we expect out of financial markets?
Good morning, Shikhar. Yes, I think the China statement on the trade was in reaction to Scott Bessent saying that if there is no proper negotiation, the US will spring back to the April 2nd level on some countries. He did not specify the countries, but we don't know what sort of negotiations are happening between China and US, although they have gone for a pause on the higher tariffs. So the trade deals are still not, something that we can assume that going smoothly. We also had indications that the US-India trade negotiations are also going on. The minister on India side has stated that deal could be signed before July, so that looks a bit positive. Yeah, yesterday we started the trading day with how expecting how the market would react to the Moody's moves. Yes, on the bond side, there was a spike up in yields, particularly on the longer end. Uh, that is mostly in the Asian and the European time. But as the US time started, we saw a good buying in the long end bonds, and that actually brought down the yields once again below the key levels of 4.5 for 10-year and 5% for the 30-year. Of course, the Moody's move is more of a reminder on the state of the U.S. Fiscal position, and so market is still looking at how the new government approaches, because there is an ongoing budget bill that is being debated in the House, and so far it has not seen the passage, and actually the expectation is that it's not making any progress towards reducing the deficit, and while big tax cuts are also being proposed. So I don't think market is going to be very bullish on the US treasuries going forward as well. On the stocks, they did start on the negative side, but eventually recovered to close flat. So that was not a very I can say very directional indication was not there, or I would say there's no major reaction to the Moody's move, at least from the market. Now, apart from the Moody's related, reactions, we had seen a lot of activities. Overall, lot of announcements. One of them, you said the Chinese have lowered their lending rate by 10 basis points, and almost all the institutions they have also reduced the deposit rate there. And this is happening after the last October, and this is a continuation of the Chinese efforts towards easing the financial conditions and supporting the domestic growth. Following China, of course, in just about an hour, we'll also have the Australian Central Bank, announcing the conclusion of their meeting. Wide expectations for 0.25% rate cut by the central bank as well. We also had, the UK and EU agreeing on a partial reset of the economic relations 9 years after the Brexit, and UK Labour government has secured its manifesto of commitment from their Parliament, or from their lawmakers, to formally align with the European agricultural and food standards, removing the need for cumbersome border checks and also the free movement of labor. So it's a step towards a better relations, and definitely UK desperately needs to boost its growth, and one of the ways is to improving its relations with the closest neighbor, that is Europe, and this is a good step as far as the region is concerned. And of course, we also had the Chinese data yesterday, where despite all the measures that Chinese authorities have taken, we're not seeing major improvement. Retail sales was lower than expected. Industrial production, although it did rise, and it was though it was higher than expected, it was lower than the previous month. And of course, the housing prices have been, still not recovering as the authorities would desire. So. Not a great, response to the measures so far. That is actually probably forcing the authorities to do more. Then Of course, the Chinese one also was weaker all through yesterday because of reported outflows and some sort of hitches in the trade negotiations as well. We also have had some indications from Mr. Trump that Russia and Ukraine will immediately start negotiations towards a ceasefire. Although market has not reacted much, but Mr. Trump seems to be quite bullish on the developments. He had a talk with Mr. Putin as well as Zelensky on this, and hopefully, this time it is going to be a real development on this front. Yes, on the currencies, of course, we did see some haven buying in the euro and gold to begin with. But then there was some resistance at 3250 for gold and 1275, 1.1275 for euro. But they have not been falling as well. So there's kind of consolidation that is happening. In fact, there is no major movement in any of the currencies. Just to give a perspective, yen has been stuck in about 30 pips range or 40 pips range for quite some time. That's very rare for yen. Now, what importantly, market is currently focused on what is likely to happen in the G7 central bankers meeting that is underway this week. And in the context of what the US is expecting their trading partners to agree to a weaker dollar or strengthening their currencies, what sort of discussions that happen between the representatives of various countries in this meeting is something that the market is looking forward to. Definitely, the meeting is happening in Canada, and there can be some trouble reaching consensus. Japanese have already indicated that they have convinced, or rather, they have made it clear to the U.S. authorities that big yen movement is not desirable, and that upsets their fiscal financial stability. So while currencies do remain in a range, I think a G7 meeting is one event that can be possibly bring about some volatility going forward. So at least for today, I think the range market will continue for our sessions. And on the rupee again, same. We have been in a narrower range, not because of any action by the central bank, but because market seems to be quite well balanced on the demand and supply side. Well bid below 85.40, and of course, offers have also been increasing above 85.55. We need a break of either 85.20 or 85.75 to give a direction to the market. We are seeing some profit taking in the stock market as well after a big run that we have seen in the last few weeks. And FI numbers have been very marginally negative after being well in the positive from the middle of April. So nothing to get concerned about, but possibly a pause in the rally and a pause in the dollar rupee is also what we are seeing, awaiting some new developments in the global market. Definitely. Thank you.
Okay, JK, that was really good. And yes, folks, the market participants are keenly watching out for the outcomes from the G7 Central Bankers Summit and the kind of statements that we'll be receiving from these particular statements will be something that can bring about the activity or the volatility in the financial markets that we've been looking out for. Till then, as JK mentioned, even though there was some sort of even buying observed yesterday, but FX markets were relatively in a ranged action. Even dollar rupee, for that matter, remained in a ranged trading space with the supports around 520, 85, 30 can continue to stay, while on the upside resistance is around 85, 70, 85, 75 is what the market participants are seeing. And break of either of these levels should provide some sort of directional action for the currency pair. On the global front, although a pause on the higher tariff was seen, the trade-related negotiations continue to be uncertain. And even though China is seen, putting in efforts to drive the economy by lowering the lending rates, the currency, Chinese yuan, on the backdrop of these particular actions as well as the flows, was slightly lower or weaker compared to the yesterday's trading space. On the bond yield side, yes, the bonds were initially observing some sort of a sell-off, but was complemented by the dip buying during the USRs, and it shows how there's some sort of difference in opinion as to what sort of activity should one expect from the yields. So that's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for joining in.